Well, a very good evening and thank you for joining us on India Business Hour. I'm Ashmit Kumar and here are the headlines that we're tracking at this hour. Sensex and Nifty turned negative for 2022 after a 2% fall today. Companies listed on BSE saw market cap erode by 4 lakh crore rupees. The Indian rupee hits another record low as the US dollar strengthens to its highest level in over 2 decades. $1 now costs nearly 81 rupees. Data shows RBI sold dollars worth $5 billion in the week ending September 16th. India's total reserves are now below $550 billion. Tata Steel moves to simplify its organizational structure and consolidate metal and mining businesses. 6 subsidiaries and an associate company will be merged into Tata Steel. Management says the move will save 1,500 crore rupees and is EPS accretive. India's top private hospital chains are staring at steep penalties. An investigation by the Competition Commission shows they abused market dominance through excessive pricing. That's a money control exclusive. Shares of Mahindra Finance plunge in trade after RBI orders the company to stop using third-party loan recovery agents. Move comes after an agent working on behalf of the company mowed down a pregnant woman in Hazaribagh. The draft telecom bill is likely to be taken up by the Parliament in July next year, say sources. Apart from proposing to regulate over-the-top players like WhatsApp and Signal, the bill also proposes a jail term or hefty penalty for those providing incorrect personal information. India makes a strong pitch for peace and calls for an end to the war between Russia and Ukraine at the United Nations General Assembly. External Affairs Minister Jaishankar says the conflict is of profound concern and the outlook appears truly disturbing. Russia starts to hold a referendum in occupied Ukraine regions to formally annex the areas. Ukraine and the West have called these referendums illegal and a sham. Heavy rains lashed large parts of North India. At least 13 people are dead due to incidents of building collapse in Uttar Pradesh. Gurugram asks the private sector employees to work from home. Waterlogging in large parts of Delhi leads to traffic snarls. Rajasthan Chief Minister Ashok Gehlot makes it clear that Gandhis will not contest the upcoming presidential elections within the party. Also confirms that he will run for the top job. Well, let's begin with the sell-off on the Lal Street now. Weak global sentiment following the US Federal Reserve's rate hike continues to roil equities around the world. In fact, the Sensex and the Nifty lost 2% today, turning negative for 2022. Companies listed on the BSE saw market cap erosion of 4 lakh crore rupees today. Banks and Nifty mid-cap index also got battered. Anuj Singhal is joining us now with a quick market wrap.
Well, brutal day for the market today. For last few days, we've been talking about decoupling. Today, the market just recoupled. And how? And banks led the massive decline today. There was a bit of an algo trade at work because of what was happening in the currency market. For long, the rupee was resilient around the 80 mark. But forget 80, even 81 was tested. And the dollar index also surged. So the big risk for the market is the FI selling back. And the ETF money, which drove the market in last month's rally, is that on its way out? The big stocks, of course, were HDFC Twins and other banks. Pharma was the only sort of pocket of outperformance, but that doesn't count for much. No point talking individual names, but just purely in terms of drag on the index, the big ones, HDFC Twins, Reliance, ICICI and State Bank of India. And aside of that, the NBFCs were getting clobbered. So names like M&M Financial, Indiabulls Housing, Chola, LIC Housing, across the board there was quite a bit of decline. The big question really is, has the trend changed for the market, and now are we going to align with the global market? I think we'll find out soon enough.
Right, Anuj, thanks a lot for that. Now, the strengthening of the US dollar continues to put pressure on emerging market currencies, including the Indian rupee. Now, the Indian rupee hit another record low as the US dollar strengthened to its highest level in over 2 decades. $1 now costs nearly 81 rupees. Data shows RBI sold dollars worth more than $5 billion in the week ending September 16th. India's total reserves, meanwhile, are now below $550 billion. Lata Venkatesh is here with a money market wrap. Lata.
Well, it was a brutal start. The rupee started at 81 past, 81.09, and went on to even 81.23. But it recovered substantially, especially because the Reserve Bank is appearing to have sold a goodish bit of dollars. At least that's the chatter we got from the forex dealers. So the rupee was dragged to below that 81 mark. But the market is still wondering what will be the next range. Will 81 be the new 80 and RBI will defend it? Now the market is really watching. The equity market sell-off indicates that FPIs are selling. So the market will watch for whether the FPI selling now is a trend. And does it overturn the 3 months of buying that we saw from FPIs? They will also watch the RBI's actions. Is it ready to burn more FX reserves? And it will also have to watch, where dollar is headed and where other currencies like the yuan are headed. So it's really wait and watch time. There is no range that one can talk about.
Right, Lata, thanks a lot for that. So it's 81 rupees nearly for $1. Let's move ahead now. The big corporate story of the day. Tata Steel has approved the merger of 6 subsidiaries and an associate company will be merged into itself. 4 of these companies are listed on the exchanges. Nigel D'Souza joins us now. Nigel, help us decode this move for us.
Well, the long-awaited big consolidation drive at Tata Steel has finally been announced, with listed entities like Tata Steel Long Products, the tin plate, as well as Tata Metallics. All of them are going to be merged in its parent, that's Tata Steel. Keep in mind, Tata Steel has majority stakes in most of these companies, though in TRF, they have around 34% stake. Now, the merger ratios that were announced should come up for you on the screen, and they were more or less in line, barring TRF as well as Tata Steel Longs, where the merger ratio was unfavorable, which explains why both those two stocks were under pressure post the big run-up we have seen in the last 1 week, in fact, in the last couple of weeks. Additionally, Tata Metallics also got hit, as the street believed, since bulk of its EBITDA is coming from the non-commodity DI pipes business, well, it could possibly warrant a higher valuation. But that's not the case going by the merger ratio, and that in fact disappointed the street. Now, benefits that will come out of this entire consolidation is simplification of the group structure, as well as synergy benefits. But getting to the key benefit then, as of now, Tata Steel Longs as well as Tata Metallics, they procure their iron ore from Tata Steel. They have to pay 22.5% additional royalty on this purchase. Now that gets eliminated post the merger. Additionally, Tata Steel Longs, well, the balance sheet had got stretched post the NINL acquisition. So the merger is a step in the right direction. We spoke to the management earlier today, and Mr. Kaushik Chatterjee said that the merger will be EPS accretive, and also said there will be more than 1,500 crores of cost saving due to this amalgamation, which bulk of it will come in from the royalty savings that I just explained.
All of these are obviously EPS accretive for Tata Steel standalone. On the other hand, all of these were anyway consolidated because these were all subsidiaries. So after we the minority shareholders, the minority interest part gets absorbed. But otherwise, they were on its own already being part of the consolidated balance sheet of Tata Steel. So that's less of a point. The more important point is to drive the business in the future. And I think that is what will reflect very clearly on the Tata Steel balance sheet. And when I say Tata Steel, I'm always looking at consolidated balance sheet because that's the most relevant one.
Well, India's top private hospitals are now staring at hefty penalties for allegedly abusing their market dominance and overcharging patients. A probe by the Competition Commission of India has found that top private hospitals charged exorbitant prices for their services. Binoy Prabhakar is joining us now with this money control exclusive. Binoy, tell us more about what the CCI probe entails.
Earlier today, Money Control reported that a 4-year-old investigation by the Competition Commission of India found that some of India's largest hospital chains abuse dominance through exorbitant pricing. The CCI will soon meet to hear the responses by Apollo Hospitals, Max Healthcare, Fortis Healthcare, so Gangaram Hospital, Bachara Hospital, and St. Stephen's Hospital. These are all hospitals that operate in Delhi NCR. The CCI will then decide whether to impose penalties. The penalties could be steep. The CCI can impose a penalty of up to 10% of the average turnover for the past 3 financial years of any enterprise that has violated competition laws. For example, Apollo Hospitals posted an average turnover of rupees 12,206 crores and Fortis rupees 4,834 crores in the past 3 financial years. Now, let me tell you why the CCI action is really significant. It's the first such action by a regulator against the ridiculously high prices of medicines and services that are fixed by hospitals. To cite an example, the CCI found that room rents in some of these hospitals are way higher than what are charged by 3-star and 4-star hotels. Hospitals, by the way, have operated free of regulation so far. Patients admitted to hospitals have absolutely no choice and end up paying really high prices. The CCI investigation and possible fines could potentially check the prices of these medicines and healthcare equipment, or at the very least, bring in some transparency in the way hospitals charge patients.
Right, Binoy. So first of its kind probe by the CCI into the healthcare space. Now, meanwhile, the National Company Law Tribunal has issued a notice to SpiceJet over an insolvency petition. The case was filed by an operational creditor, the SpiceJet, called Acres Buildwell Private Limited, claiming outstanding dues. The tribunal has asked SpiceJet to respond and will hear the case on 30th of September. Mind you, the aviation regulator has curtailed SpiceJet's operation by 50% and has expressed concerns over its finances. In some crucial corporate appointments, Varun Berry, who was the MD and the CEO of Britannia, has been elevated as Executive Vice Chairman and Managing Director. Ranjit Kohli has been named the new CEO with this move. Britannia has split the roles of MD and CEO for the very first time. Ranjit Kohli will also serve as an Executive Director. The draft telecom bill, which is currently in public domain for stakeholder inputs, will likely be tabled in the Parliament in July next year. Sources tell us that the bill is unlikely to be tabled in subsequent winter session or the budget session of Parliament. The draft bill, apart from regulating OTTs and providing for penalty waivers under extraordinary circumstances, also proposes to penalize customers for providing incorrect information to telecom companies.
The person who is receiving a call should know who is making that call. इसकी कॉरोलरी आती है 2. पहली कॉरोलरी आती है कि जब भी कोई कॉल करने वाला व्यक्ति यानी जब भी कोई टेलीकॉम सर्विस प्रोवाइड करने वाला व्यक्ति हो उसका KYC 100% एक्यूरेट होना जरूरी है.
The shares of M&M Finance plunged in trade after RBI ordered the company to stop using third-party agents for any recovery or repossession activities until further orders. Now, the move came after an agent working on behalf of the company allegedly mowed down a 27-year-old pregnant woman in Hazaribagh. We spoke to TT Srinivasa Raghavan, former MD of Sundaram Finance, to understand what he made of the RBI clampdown on Mahindra Finance.
To put fetters on Mahindra Finance or on the sector as a whole is certainly excessive. One individual has stepped out of line. Let him be dealt with as applicable under the law. Let this be a message to others that you cannot violate the law, that you have to live within the letter and spirit of the law. But to say that we will ban this practice altogether, to me, is actually counterproductive, because in a few months' time, you're going to find this showing up as higher delinquencies and higher NPAs on the balance sheets of NBFCs and banks.
Well, the U.S. Food and Drug Administration has issued observations to pharma company Biocon's Malaysia and Bengaluru facilities. Now, CNBC-TV18 has accessed Form 483 by US FDA, which details that procedures relating to prevention of microbiological contamination were not established in the Malaysian facility. The regulatory authority also said that the drug substance manufacturing in Bengaluru facility is not adequate in preventing contamination. Reliance New Energy has announced that it will make an investment of $12 million to acquire 20% stake in Calix Corp, a US-based company engaged in solar technology. The companies have also entered into a strategic partnership agreement for technical collaborations and commercialization of technology. Food aggregator Zomato has cracked down on cloud kitchens that are operating more than 10 brands from a single location. This move comes after a blog post revealed that one such cloud kitchen in Bengaluru was operating nearly 200 different brands from just one location. Boeing will pay $200 million to settle civil charges that the aircraft manufacturer and its former CEO misled investors about the safety of its 737 MAX aircraft. The aircraft was grounded for over 20 months after two fatal crashes killed 346 people. U.S. securities regulator alleges that both Boeing and former CEO knew that the aircraft's flight system posed a safety issue but promised the public that the plane was safe. The new UK Prime Minister Liz Truss has announced historic tax cuts after Bank of England warned that Britain was slipping into recession. The 45% top rate of income tax, which is paid by the richest earners, has been scrapped and replaced with a 40% rate. The UK government also cut the basic rate of income tax from 20% to 19%. Time now for a short break, but coming up next, heavy rains lash large parts of North India. We get you a ground report on the other side.